Thank you. Very warm welcome to this panel on debt tokenization and Project Promissa in partnership with the World Bank. We have a fantastic panel here, and I would say we let them introduce directly by themselves and start with Patrick.
Hi, everyone. My name is Patrick Cheng. I'm from the World Bank, but more specifically, the World Bank Treasury. So I manage the financial technology team, and it's just a great privilege. And thank you, GBBC, for the invitation. First time in Davos. I even have my boots on, though I think there's not enough snow to justify this. But it is a great setting to talk about something we're doing with the Swiss National Bank and the Bank for International Settlements. But thank you for inviting me.
Then Liz.
Good afternoon, everyone. My name is Liz Towler. I'm the CMO of Digital Asset, and our technology is the technology that's been used to create the Cantor network, which is the only public layer 1 blockchain with inbuilt privacy. We have over 100 participants in our network, and to date we've seen tokenized assets up to the tune of $3.6 trillion on our network. So very excited to be here, first time in Davos as well, and I was hoping for a little bit more snow as an Australian, but here we are.
Hi everyone, my name is Oleschak. I'm just recently moved back to the Swiss National Bank. So on top you see where I worked before at the BIS Innovation Hub, where I worked on projects from central banks for central banks. So we looked at retail CBDCs, for example, and also today we'll be talking about Project Promissa, an interesting project that the Swiss National Bank at the BIS Innovation Hub, together with the World Bank, were doing. Hi everyone.
Great. My name is Dylan Walsh. I run corporate and institutional banking at Oliver Wyman. We do strategy consulting across a range of different, kind of TradFi, as well as some more, I guess, advanced crypto natives in the market. And we've touched on this in a number of different spaces, but we've been pretty excited to work with some of the multilateral agencies and as well as some of the government agencies that are really starting to create a little bit of a more of a stable environment for tokenized assets. So that's probably where we've spent most of our time working in the broader crypto blockchain space over the last few years. So excited to be with you all, and excited to talk more about it.
Thanks a lot to you all. I'm Reto Luthiger, your moderator today. I'm from MLL Legal, a partner there, a Swiss business law firm. We started advising crypto in 2016 already. So I would say we start off with Patrick. The World Bank obviously is collaborating with the BIS Innovation Hub and the Swiss National Bank also on Project Promissa. Can you explain the significance of this tokenization of promissory notes for your institution and other stakeholders?
Sure, gladly. And maybe the name Promissa, let's kind of demystify it. It is a word for promissory notes. And before I come in to talk about the promissory note, maybe a quick introduction to who don't know the World Bank. So the World Bank is an 189 member country institution. We kind of work like a cooperative. So we have member countries that we work with. And of course, under the World Bank, there's two entities called the International Bank for Reconstruction and Development, IBRD, and then International Development Agency, or Association, sorry, IDA. I think it's a great fitting to say that this project came from a problem we're trying to solve. So, as we started in the 1940s as part of the Bretton Woods Agreement, so the World Bank and the IMF jointly were part of that, discussion that created ourselves, probably all beyond our time. But once we look at it, these notes, called promissory notes, are really just an IOU, a commitment from the country to the development agency of how much funding they need to pledge in. So for IBRD, it ratifies into voting shares. For IDA, which is our development arm, it comes into funding for assistance, grants, concessional loans, and other type of vehicles. Beware to all of you, back in the 40s and 50s, we love paper. It's kind of like the thing of the past. But fast forward to right now, those papers still exist. And those papers are very, very important. It secures our funding, and it's a very intergovernmental agreements that actually means certain funding and security for what we need to do. Just to lay the context a little bit for IBRD, or our main entity, the amount of outstanding promissory note has been up to 440 million. For IDA, it's the largest. It goes up to 14 billion. We have another entity called International Finance Corporation, which is a private arm of the World Bank. It goes a little bit smaller. It's like almost $1 million. But we also have MIGA, or our Multilateral Investment Guarantee Agency. I hope I get that right. They also have a part of their membership dues to come in. You join that agency, you have to pledge something in promissory note. So just in short, these notes are actually used quite frequently, and some of them actually are held in perpetuity. But most of it are actually in cash on a very regular basis. So what are we solving here is really a paper note. How do we dematerialize it and also try to tokenize it at the same time? And really, this is a call for some of the needs that we need to be faster and better, more efficient by way of digitizing in a different format. It might create that opportunity. So just wanted to share a little bit of the context. But of course, the major partner here is the Swiss National Bank in conjunction with the Swiss Center of the Bank for International Settlement, Innovation Hub. So maybe that may be something Robert can speak on from the central bank's point of view. Yeah.
Sure. Thank you, Patrick. So as Patrick explained, promissory notes are super important for multilateral development banks, such as the World Bank, but also for other MDBs, such as the Asian Development Bank, the African Development Bank, and others are using promissory notes. Now, where do the central banks come in? Now, as you know, these promissory notes are issued by governments. These are promises by the governments to pay in the future, maybe in the next 10 years or so, a certain amount to these MDBs so that they can finance their operation. Now, in this relationship, these promissory notes are actually held by the central banks of these governments, because these central banks not only act as custodians, but also they act as payment agents. So if a government makes a promise, writes this promise on a promissory note, this paper goes to a central bank, and there it's being kept. And when the payment is due, the government tells the central bank, could you please make the payment for me? They take the promissory notes out of the safe, write on the back the amount that they've been paid. You know, there's a stamp, signature, and it goes back into the safe. So we've spent some time at this SMB with a colleague of mine who's in charge of this process. We spent half a day going through each of the processes that are currently in place just at the SMB to actually manage these promissory notes as they come due. Now, while the current system gets the job done, the World Bank is actually just raised a lot of money just recently in December last year. We have been talking to central banks, we've been talking to ministries of finance and to MDBs, and there are many pain points around that. So it's to simplify it, it's inefficient, it's slow, and for the simple kind of idea that these promissory notes have is overly complicated. So the project was really about to find out, can we simplify, can we make it much faster and also more efficient by using tokenization on a distributed ledger technology. Now, so what have we done in the project? Those are three things. The first thing is we have built a technical platform based on Canton and also using DAML smart contracts. And we also designed a user-friendly interface to support the different work processes that are around these promissory notes. Second, we have also tested this platform with the potential users. So we had the World Bank, with the Asian Development Bank. We also had 7 nations with the central banks and ministries of finance testing the platform through all the life cycles that the promissory notes typically have. And we also looked at the legal feasibility. That's very important, right? If you want to tokenize something, it must be legal feasible, so that we also looked in different countries, would it be legally feasible? I think the results were very promising. We have finalized the project now, currently writing the report, and there's a big interest to take that into the next phase. And so that's kind of very new for central banks, you know, not only working on proof of concepts and pilots, but also taking something into operation. So that's kind of the big challenge that we are looking at in the next phase of the project.
Thanks a lot. So as this is a pilot now, we all know there have been other projects already. Patrick, can you elaborate how Project Promissa builds actually up in the World Bank's previous digital bond issuances?
Yeah, no, Project Promissa, distinctly Swiss origin, but also at the same time, we've been quite active in 2003 and 2024 on digital bond issuances. So IBRD, part of the World Bank, and IDA were basically also a public sector issuer. So we're one of the largest MDB issuers in the market in the Supra space. What we've been actually operating is global. We're a global issuer, so on the part of digitization of bonds, we have started a journey back in 2017 and issued a deal in 2018 in Australia called Project Bondi, to the Bondi Beach. And there is actually 5 words that we put into a letter. It's, blockchain, enabled, something with ONDI, so we did it. So sorry, I'm a little bit jet lagged today, but that is something that we kind of came up with. But in 2023, we also continued the evolution in doing a euro-denominated issuance through Euroclear's digital FMI system. And of course, in 2024, we finished up a collaboration with the SNB and part of their Helvetia Phase 3 to issue a Swiss franc digital bond, which actually settled using the central bank supplied CBDC. So as you can understand, our journey as the World Bank has been quite consistent. We were actually believing this technology can actually bring in effectiveness on how these positions can actually operate in the market. It could probably help with operational efficiency to the extent possible. As you know, sitting as an issuer, we actually work with a number of different players in the market, a very established market. It's there for a reason, so ranging like dealer banks, fiscal agents. We have calculation agents, we have our investors, we have the investor's custodian. So all these plays a very important role in helping shape out the international capital market, but we're understanding what this technology could potentially make some enhancements in some of the processes. And the final mandate of the World Bank is really for development, right? So we are able to work with like-minded partners, high quality, banks, to help us understand how this technology can shape the next phase of the capital market. In a lot of the cases, we were actually dealing with some of our development economies and emerging, nations where they need to kind of know these new technology to see how it could affect their new sense of capital market system. Some doesn't even have a capital market system. So in a way, we're actually trying to push the needle there. How does it tie back to Promissa? It is another product to materialize. But again, like what we said before, perhaps this technology can do the dematerialization and tokenization all in one step, and perhaps trigger to some sort of another money system, which right now we're seeing a lot of development across the board. Thank you.
So Robert, maybe you can also give there some insight from the SNB and BIS.
Yeah. So today I can really talk about all the superlatives that the SNB is doing, because the SNB is the first central bank who has issued wholesale CBDCs on a third-party platform. that this is the platform that has been used by the World Bank to issue their bonds. So that's really nice that you have used this platform. And I think these two projects are really complementary because on the one hand, what we are doing is issuing tokenized money on one platform, a third-party platform. This is called Helvetia Pilot. And with Promissa, we're actually looking at how to tokenize financial assets. And, well, maybe into the, I don't know, far future or near future, you can kind of connect these two. Let's see. But I think that they are really complementary and really great to work with the World Bank on these topics.
Very great. So, in general, Dylan, we see therefore the tokenization of debt instruments is gaining significant momentum, with an estimated 64% of accredited investors and 33% of institutional investors planning to invest in tokenized bonds by the end of 2024, I've read. From your perspective now, what are the key drivers behind this trend and how might it impact traditional banking and financial services?
Okay, so I don't think we've quite gotten to those penetration levels into 2025, but we're probably knocking on the door, and I think there's some expectations that there will be some big shifts in the market overall. But when we look at taking a big step back, when we look at the drivers of what's happened in the market, the first and foremost driver is demand, and I think that's exactly what you were speaking to there. The economic case for tokenization of financial assets, of a variety of financial assets, and actually shifting to blockchain technology to handle the operations and risk management of those assets is pretty compelling. And I think a lot of people in the industry are there and are ready to do it. But what we've found has been there are really like four main drivers or potentially obstacles that we've run into over the last few years, and it's played out in different ways in different markets, so we've had a bit of a natural experiment there. I think the first is the legal framework. So is it legal to create these assets and hold these assets? I think that's probably advanced the most across multiple different jurisdictions, but not at an equal speed. I think the second framework is the regulatory framework around this. So financial institutions that might engage in this, how will the regulators look at those assets and treat them from a capital standpoint or just handle regulation in general? That has varied much more dramatically market to market. And I think in particular, the European market, Singapore maybe have gotten way out ahead of what we've seen maybe in the UK and in the US, which is a fair bit behind, and maybe there'll be some catch up to play. The third big driver that we see is just having some trusted market infrastructure. So that's where like the Canton Network comes into play. If there are tools out there that people are starting to trust and believe in that they can use, then that will actually start to just self-reinforce in the market. And you can expect a lot of people to start gravitating towards common platforms and the things that they know work. And as that trust builds, you just actually start having kind of the common anchor pieces of infrastructure. And then the fourth and final piece, which sometimes gets short shrift, is I think there needs to be some active government support. And when I say government, I mean that very, very broadly. So the institutions represented here today definitely fall into that category. Some of these proofs of concept by players that are going to be really important in shaping the dialogue around what financial institutions are ultimately allowed to do and not do will be very important. And again, I think that's an area where we've seen the Europeans and probably Singapore out ahead of where the US and UK have been overall. So from a broad landscape, I think the demand is there. It's just there's been some real supply side constraints just in the way that the financial institution or the financial regulatory framework exists.
Great, thanks a lot. I mean, you mentioned also Canton Network, and maybe Liz, you can say something about how the Canton Network has demonstrated impressive capabilities in facilitating atomic transactions, for example, across multiple platforms and jurisdictions. What can be learned actually from the progress to date on debt tokenization more broadly, and how might it in the future developments be in projects like Promissa?
Yeah, I mean, I think we've been incredibly fortunate to work with some of the world's leading institutional banks. And we started off very simply in building platforms that could tokenize those assets, but kept in mind the connectivity that you actually need to mobilize assets across the way capital markets work today. And I think that we're at a stage of adoption in this tokenized landscape where we know that it's really not enough to do a single issuance. You know, if I think back to some of the platforms that went live back in 2022, we were doing kind of single denomination euro issuances, and that was great. But really what we want to be able to do is mobilise those assets across multiple parties. And we've seen many market firsts in the last couple of years on the Canton network. So HSBC Orion has done, 4 or 5 different issuances, including multi-currency issuances. The recent ECB trials, so 2 of our clients had platforms involved in those. It's BNP Paribas and HSBC and Goldman Sachs all participated in those trials, and they were able to actually execute atomic settlement using a CBDC. And so I think the learning really and the takeaway is start small, iterate as you go and build the capability as you go, but always bear in mind that we are trying to connect these assets across the ecosystem, because the market's at a phase now where it's looking for real utility and return on these tokenized assets. It's just not enough to tokenize the bond and hold it.
Yeah, very great. So to catch up, actually, we have had a look at the past, at the present, and now the future to you all in a few short sentences, and the future of debt tokenization. What do you believe will be the most significant impact on global financial markets with regards to debt tokenization? Maybe starting with Patrick.
So that's actually a big question. But for us, maybe standing from an issuer perspective, I think just recently in December, we met with a group of our multilateral development banks that all manage funding and investments. One of the biggest call too is this is time for conversions. So looking out, there's so many different technology and there's so many different pilots or prototypes that could prove the value of this. But when you look at it from a usability standpoint, this interoperability that Liz mentioned and some of that Dylan had kind of quoted, it's actually quite important to keep this ecosystem continue to blossom. I recently worked with Moody's and IGMA. I just want to name them too. They've been very much instrumental partners with the World Bank to understand the evolution of the digital asset space. So looking at the digital bonds, for example, since 2017, we have come from an annual total outstanding of 113 million to now 7.6 billion. And what's happening is the last 2 years since 2022 has been the biggest uptick in terms of volume and also the size. So we're also very proud to mention, we didn't know about this, but in our 2024 issuance in May on the 6th digital exchange, our issuance, although it's not a very big one, it's 200 million. We typically issue in the billions, but on the digital bond, 200 million, we're able to push the total outstanding issuance in that exchange to 1 billion mark. So in a way that we're kind of fortunate to be part of that conversation. And I think in order for it to continue to blossom, the World Bank has a pretty large size of asset that we also have to invest ourselves, invest for our clients, which are usually some central banks that we actually are reserve managing for them. I think the other question is how much on the secondary markets is actually propelling. How easy, perhaps, on the secondary market can you have the investor on the other side to complement this? You have the supply, but where's the demand? So I think that's where we're looking out in 2025 and very interested to hear some of the new initiatives that may be happening in collateral space, maybe in the repo space, or as simple as, I think derivatives might be an interesting one. Anything, we're very paper-based and OTC. But please look into the World Bank as your partner, and then we're here to see what we can make a change. Thank you.
Then Robert.
I mean, when you look at the current pain points in debt issuance, I believe it's really the small issuers or mid-sized issuers who, for them, it's just too costly to issue debts the current way it is being done. So I expect that debt tokenization could solve this pain point, that we will see more small and mid-sized issuers hitting the market. I think that's one thing. The second thing I expect is mobility of this collateral. So if you are, trading with derivatives, you're clearing with CCPs, you need to mobilize collateral very quickly, and that's big issue. So if that collateralization can solve this issue, that would be really great, because then you can move your collateral or your investments wherever they are needed. So I think that's also another pain point that I expect that we should be able to solve.
Great. Dylan?
Wow, it's hard to put it in, especially after hearing comments from Patrick and Robert. It's hard to put it into one holistic, I think, theme, one biggest thing that will come out. But if I look at this through the lens of financial institutions today, so that's typically who I spend my time with and work with, I think when they look at this and the promise of this, it does do a lot of the things that both kind of Patrick and Robert alluded to, which is it allows some of their issuers or who they would like to support in issuance to issue what have historically been very illiquid products into the market. So it's effectively a liquidity event for these institutions. I think tied to that is, if you are going to move towards more real-time settlement in the market across a variety of different asset classes, you need to get your hands on this collateral very, very quickly. So I don't want to repeat Robert's point, but it's a really important one. And you're seeing this is where the asset classes start to meet. You have what are presumed to be very, very liquid asset classes, but coming up with a collateral for real-time settlement is a huge problem in the industry. And then I guess the last point I would make is that I think this might be the impetus for correcting some very slow-moving, old-school, expensive processes that have created a huge problem in the industry. And it's a risk management failure in some sense for the industry, because I think they generally manage risk and compliance with people, which you need those people, but you don't. There are so many different tools that you could put in people's hands so that they could do that more effectively. But also the operational overhead and kind of, no offense, the legal overhead involved in some of these processes can really be daunting. And I think if you can start to break down that process and re-engineer it in a way that's healthy, I think we'll see a big shift in the efficiency for the industry as a whole. And the challenge that might come is if you just build this and it exists in parallel to the TradFi world, then I don't think we're going to get nearly the impact that we could from something like this. So if it has an impact on that traditional world, and I think it will, we could see a big step change in the way that banks operate.
Great, thanks. Then Liz?
Yeah, just a few points to pick up on. I think the collateral piece, we've all said it's extremely important. There's so much demand for high quality liquid assets. So we're fully expecting to see, some of the big, US treasuries and, Eurobonds and those sorts of things be tokenized and hopefully available on chain. But the biggest piece and the biggest, I think, from linchpin in terms of unlocking this outside of the normal trading hours is the ability to settle these margin calls, to settle these movements across crypto and TradFi markets real time. And I'm actually very excited to share an announcement that Circle just made while we're in this room, that they are joining, bringing USDC to the Canton network, and they are also acquiring Hashnote, who is the largest USYC USDC and USYC will be natively available in Canton. I got that completely wrong, so it wasn't a great announcement. But I think what's more important about this is having stablecoins available on chain will be the thing that will help manage the settlement.
Great, thanks a lot for also sharing this great announcement. Really good to hear. I think we have many pain points to solve, sorry. And it's going to be an interesting year with high expectations. And maybe we'll come back next year and look back if we have met them or not. Thank you, my fantastic panelists, for this very interesting insights, for GBBC for organizing this, and also for partnership with World Bank.
Thanks very much.
Thank you.